OKLO has become one of the most watched names in the clean energy and nuclear innovation space. Its stock has produced some eye-popping numbers, but these come with an equally dramatic set of risks. Let's break down where things stand right now. As of the market close on September 15th, OKLO closed at $95.68. That was after opening around $84.25, with intraday highs up near $95.91 and lows down near $83.30. The stock was up about 15.7% on the day. Over roughly the past year, OKLO has rallied more than 1,300 to 1,400%, transforming $10,000 into close to $150,000 in theoretical gain if held through that period. Several developments have fueled investor enthusiasm. OKLO has announced a $1.68 billion investment in a nuclear fuel recycling plant in Oak Ridge, Tennessee. OKLO is moving toward what it calls a 14-gigawatt pipeline of small modular reactors, SMRs, with a target of nearly $5 billion in annual revenue by 2028 if the full pipeline is realized. Analysts are mixed. Some see very high upside given the sector's tailwinds, AI and data centers, clean energy policy, while others are warning about stretched valuation metrics. In fact, the consensus price target for OKLO from TipRanks is around $72.50, implying downside from the current price. Here are the realities. OKLO is still pre-revenue. It hasn't begun generating material revenue from its reactor or power operations as of now. Its first commercial power plants aren't expected to be operational until late 2027 or 2028. Cash burn is significant, though company management has secured enough capital through secondary offerings and other funding to provide runway at least into 2026 and possibly 2027, assuming no major delays. Valuation metrics are very rich. The stock price already reflects very optimistic assumptions, including successful licensing, reactor build-out, regulatory approvals, and large power purchase contracts. There's risk that any setback, regulatory, technological, or financing, could materialize as a sharp price correction. Putting it all together, OKLO offers a high-potential growth story for those believe in the future of small modular reactors, clean nuclear power, and increasing demand, especially from AI, data centers, remote and defense use. But it's unquestionably speculative. Elevated valuation, long time horizon, regulatory, technical, and execution risks. Capital needs remain large. If you invest, you should have a long horizon, be comfortable with volatility, and not allocate more than you're willing to lose in this kind of high risks and high rewards scenario. OKLO is a high-flying stock. Great upside potential, strong narrative, big milestones ahead, but also no guarantees yet. For many investors, whether it's worth it depends heavily on risk tolerance, patience, and belief that OKLO can deliver on its ambitious plan. Thanks for listening. Always do your own due diligence and keep up with future reports and regulatory outcomes.